Hey guys, and welcome to this new Blockledge video on how the 2023 recession could impact the world of crypto and make you rich. I'm Maxime Rochody, co-founder of Blockledge, which is a crypto and blockchain gamified education platform. As you may already know, the United States is currently facing a period of economic uncertainty with high inflation rates and the possibility of a recession looming on the horizon. While these conditions can be challenging for traditional investments like stocks and bonds, they can also create opportunities for those who are willing to take a closer look at alternative assets like cryptocurrency. In this video, we'll explore the potential impact of the 2023 recession on cryptocurrency and discuss the opportunities that come with investing in this exciting and rapidly evolving market. This video is not financial advice. Always do your own research. So whether you're a seasoned crypto investor or just curious about the possibilities, let's dive in and explore how the recession and crypto could make you rich. Before we dive into the impact of the 2023 recession on cryptocurrency, it's important to understand the concept of inflation and its role in the economy. Inflation is a critical economic concept that has a significant impact on the purchasing power of currency and the overall economy. In simple terms, inflation is the rate at which the general level of prices for goods and services is rising. When inflation is high, the value of money decreases, making it more expensive to buy the same goods and services than before. There are many reasons why inflation can occur. One of the main drivers of inflation is an increase in the money supply. When there is more money in circulation, the demand for goods and services also increases, which can lead to higher prices. In the United States, the Federal Reserve plays a vital role in controlling inflation through monetary policy. However, in recent times, the US government has spent a considerable amount of money on stimulus programs, which has led to an increase in the money supply and inflation. Did you know that $1,000 from 1923 is equivalent in purchasing power to about $17,000 today? And this fall in the value of the dollar is partly due to the frequent printing of new money. The Consumer Price Index, aka CPI, is a widely used measure of inflation, and it is expected to rise at a rate of about 4% in 2023. This news has led to concerns about the value of the US dollar and the impact it will have on the economy. A weaker dollar could cause prices of imported goods to increase, making them more expensive for consumers. It could also lead to increased borrowing costs, which would negatively impact businesses and consumers. High inflation often causes instability and uncertainty, leading to economic downturns. Inflation can also have positive effects on the economy. Inflation can stimulate economic growth in the short term by increasing consumer demand and driving investment. There is also the fact that it can make alternative assets like cryptocurrency more attractive to investors. As inflation erodes the value of traditional assets like cash and bonds, investors often turn to assets that are perceived as more inflation resistant, like gold, and that's why we're here today, cryptocurrency. As we discussed earlier, high inflation rates can lead to instability in the economy, making traditional investments like stocks and bonds less attractive. However, one potential investment that has gained attention in recent years is cryptocurrency. If you want to know precisely how cryptocurrencies work, we created a 25 pages long beginner's guide to cryptocurrencies that you can claim for free in the first link of the description. But one thing you must know is that unlike traditional currencies, which are issued by central authorities like governments or banks, cryptocurrencies are decentralized and operate on a peer-to-peer network. And one of the key features of cryptocurrency that makes it attractive to investors in times of high inflation is its limited supply. Most cryptocurrencies have a predetermined maximum supply, which means that they cannot be inflated like fiat currencies. This feature makes cryptocurrency a potential hedge against inflation, as its scarcity and finite supply make it resistant to the effects of inflation. Another factor that makes cryptocurrency appealing to investors is its independence from traditional financial systems. Cryptocurrencies are decentralized, which means that they are not subject to the same regulations and restrictions as traditional financial assets. This independence from central authorities can be particularly attractive to investors who are concerned about the impact of inflation and government policies on their investments. One cryptocurrency that has gained significant attention in recent years is Bitcoin. Bitcoin was the first cryptocurrency to be created, and it remains the most widely known and traded cryptocurrency in the world. Bitcoin has a limited supply with only 21 million bitcoins in existence, which makes it particularly attractive as a hedge against inflation. The current economic environment with high inflation rates and the possibility of a recession has created a situation where cryptocurrency could be an attractive investment option for those who are looking for alternatives to traditional investments. And history confirms that financial crises actually benefit cryptocurrencies. But just before I give you historical examples of financial crises benefiting cryptocurrencies, please consider dropping a follow and a like if you enjoy our content, and let's get back to the video. We know that a recession can lead to increased innovation and development in the cryptocurrency space. During economic downturns, entrepreneurs may be more likely to turn to alternative investment options like cryptocurrency, and developers may try to counter this financial crisis by developing new innovative solutions. The first time we've seen the effect of a recession on cryptocurrency is after the 2007-2008 financial crisis. This crisis led to Satoshi Nakamoto developing Bitcoin to create a digital currency that wouldn't be controlled by governments and that wouldn't suffer from the same problems. This crisis opened a Pandora's box and has been the beginning of people seeing crypto as a way to escape future crises. At the beginning of 2013, a huge banking crisis hit Cyprus.
Global worries stemming from that financial crisis in the Mediterranean nation of Cyprus.
Now, it has stocks sliding across Asia this morning, and it was a major reason for the Dow's 90-point skid yesterday. ABC's Nick Schifrin is in Cyprus, where worry and anger is rampant.
Cypriot banks therefore had to block a large part of their clients' assets who couldn't withdraw their money anymore. Many Cypriots got interested in Bitcoin at this moment, and the entire world saw this situation as proof that they needed to escape the traditional banking system. Between March and April 2013, the price of Bitcoin went from $30 to $130, even hitting $240 on the road. An even more telling example is that of the beginning of 2023. Three events strongly shook the financial ecosystem. Silicon Valley Bank, Signature Bank, and Silvergate Bank went bankrupt.
Silvergate Capital Corporate is now announcing their intent to wind down their operations and voluntarily liquidate Silvergate Bank.
Financial regulators shut down New York-based Signature Bank.
Well, the FDIC just reported that California regulators shut down Silicon Valley Bank.
In addition to these events, the inflation figures for the United States have been announced, and even if they are lower than expected, they are still considered too high. This accumulation reinforced the feeling of anger towards the traditional financial system. This resulted in an increase of the value of Bitcoin by about 25%. The crypto market works in such a way that altcoins generally follow Bitcoin a few days or a few weeks later. So these financial crashes were actually great news for the crypto ecosystem. To conclude, I must first tell you that this isn't an exact science. We've seen examples of financial crises that didn't lead to an increase in the value of cryptocurrencies, such as that of COVID-19. But the 2023 recession has already started with a surge in crypto prices, and it looks like chances are high that it actually keeps going. Once again, this is not financial advice. Warren Buffett once said, "Be fearful when others are greedy and greedy when others are fearful." The 2023 recession will be full of opportunities, and it's now up to you to take them.